Okay, lesson 5 is all about order blocks. It should just be a quick one, to be honest, because there's not too much to cover. We just need to understand what the heck they are, how the heck we can see them, and how they can potentially be used within our trading strategy. So an order block is basically a position within the market. It usually happens after a liquidity sweep, or it can be with the entry of a fair value gap as well. But the order block is the section within the market, distracted by an email there, but a section within the market that the big market movers, the big traders like the banks and such, that is the section or the area within the market that their orders were able to get filled, whether a buy or a sell order. In that range, that is where they were able to fill their orders to move the market the direction they desired. So how do we actually spot order blocks and how do we use them? So jumping onto the market, we can take a look at an example over here that I did just have, and then it vanished on me. Great. Okay, it's here. So let's take this back a little bit. Now, as I said, they can happen after liquidity sweeps or after fair value gap fills. Let's just take this example here. Say that we had a liquidity sweep from a certain low over there. All right. As we know, after the liquidity sweep, next thing that we're looking for is a break of structure. We should know how to mark these by now. And then once that break of structure is confirmed, where do I place my order block? Look, some people place order blocks slightly different. Some people just use the body of the candle. Some people just use the wicks. Some people use multiple candles within it. For me personally, because they're not exact price points, you know, it's a block, right? It's a range that price could come back to fill. So for me personally, the way that I place my order blocks, I use the rectangle tool again, but then I've just come and whichever candle was the lowest candle, as we can see, this candle right here in the middle was our liquidity sweep, and that was the lowest point. Whatever candle has the lowest point for that setup, that is where I'll put the bottom of my order block. That is where the finish of my order block is going to be. From there, I can basically just move my box to the top of that candle and then drag it across, change that to my order block, and that would be where I would place my order block. Sometimes though, in this example, if I have candles like this where the highs are a little bit lower, I may even just bring it down a little bit if that is like such a high candle, and then I just place it within that sort of a range, because obviously it is not an exact price point. As I said, it is not like a break of structure that has to hit a certain price point, or a liquidity sweep that will be hitting a certain price point. Anywhere within this section is where a lot of orders were filled. Obviously, not every single banker, every big trader is going to be getting put in at the same point. So there is no exact point. And that's why it's an order block. And it's within this area that after our break of structure, price could potentially retrace into and touch back into. And then we can, as we see, get a rejection out of that. So we can obviously use the order block as a possible area that price could retrace into, as it has in this example. And then we could, for this example, look to go longer, which after a few taps of the order block does eventually push price higher. So with this example, as you can see in this section, there was a lot of orders getting filled. It did take a while because we did test it a couple of times in this area, but eventually there was enough traders that were able to enter into long positions that it pushed the market higher. So let's use another example here. We'll take it onto the hourly charts for this one, and then we can see there's a couple of fair value gaps going up here. Price fills into them, and then we are waiting for a break of structure. This one I'll do a bearish example. As we can see, of course, we know how to mark our break of structures now. We are targeting the low, the most recent low within the chart. We get that break of structure to the downside. So where in this example would I be putting my order block? I would be starting at the top of this candle, because that is obviously the highest point within that move, that fill of an order block, fair value gap, I should say. That price was able to make fill orders and push a bit lower. But I wouldn't drag it all the way here. I don't personally like having my order block being past my break of structure line. So what I would do here is I would just potentially move it to this bearish candle at the break of structure level, potentially even use that bullish candle within there. And then I can drag it across, and then obviously use this as a potential area where price can fill back into after our break of structure to then potentially confirm that we could go short in the market. So if we play price forward a couple of candles, we can see we do eventually get a little fill of this. And as we said, we do not know exactly how much of the order block will get filled. But for this example, we got a little bit, we got a rejection, and then from there we could have entered into the market and see what happens next to price. It continues lower. So the order blocks are very useful. They are just used as our retracement tool. We are not looking to use them really as a setup for a potential trade to start with, at least for like our first step within a trade. They are used as our retracement tool, similarly to the fair value gaps, and they sort of go hand in hand. As we can see, there's also a fair value gap within this that helped push price back in the direction that the market makers actually wanted to move the market. We have another great example set up right here. So as we can see, we come down, we sweep this previous low. We then are looking for a break of structure to the upside. We get a couple of candles printing and breaking structure to the upside, confirming that we can potentially look to enter this trade, set up the order block. For this example, as you can see, the lowest point was this candle right here, and then I'll just go to the high of that one, drag it across, make that my order block. I like to use order block as green, I don't know why. But then we can play price forward a little bit and then eventually get a tap of that order block. And as you can see, what happens right after tapping the order block, price just rejects and continues up even higher throughout the rest of the day for that certain period. But this is a great example of how effective it actually is and how the market is actually looking to enter into trades is through reasons like this. Obviously, there was a lot of buy orders getting filled in here to push price forward that little bit. Whoever missed that, or if they potentially wanted to be entering into more trades, they make the market come back down, fill into this area yet again, and then more buys are entered into and price continues higher. So when you're on the charts, you're going to be seeing these absolutely everywhere, and it starts to make a lot of sense once you start seeing them. It's very clear, and it's very just like, obviously that's how they move in the market type of thing. So a very useful tool to be using in our arsenal while setting up our trading strategy. But there is also a way that we can use the order block to invalidate a potential trade setup that we are looking to enter. So this example over here, we have a liquidity sweep. We then get our 5 minute chart that I'm on, our 5 minute break of structure for this example, where we put in our order block. This is the lowest wick of that move. I put it to that lowest wick. And then for this one, to be honest, I'd probably put it at the top of this one. So as long as I'm at that bottom wick, I'm not looking to have a huge order block like some traders might have, including that entire candle. That's just too big for me. If I have my order block just set to around there, then that is absolutely fine for me to be having. But we can use our order blocks as a reason to invalidate a trade by waiting after the break of structure for price to then come back and fill into that order block like so. And then as we see, what do we want to do? Do we want to enter as we get a touch of the order block? No, it is just like our equilibrium level. It's just like our fair value gaps. We want to see a reaction out of those areas first before entering into the market. We have the order block get tapped in here. We do not enter yet. We wait one more candle. Does it react out of it? No, not for this example. We can see price dumped down. Would I still be looking to enter into a potential long position with this sort of a setup? Again, no, I would not. The reason being is because where I'm placing my stop loss is going to be 2 pips below my order block. This is getting a little bit ahead of the curriculum, but 2 pips below is where I would have been placing my stop loss for this potential setup. And as we can see, this candle absolutely dumps through it and ignores it. Clearly, there is more sellers at this point than there is buyers. I want to be a buyer for this example, and as we can see, the rest of the market is deciding to sell. So I don't want to enter into the market at that point. And as we can see, price just stayed back down within there and did not give us that run up that we were potentially expecting to get from the order block. So the order block is like my final piece of the tool when applying it in a trading strategy, and I use it as my last resort in terms of a retracement. And then if we get a push past it, then that's my confirmation that I should stop looking at this setup, completely erase it, wait for a new liquidity sweep or a new fair value gap entry, and then go from there, start back at the start, and then fully reset it. This will also help you avoid some losses that potentially you could be taking just by doing this, being patient, waiting for the setup to fully resolve. One last thing before we finish up this section of the course: does the order block need to get touched every single time in order for it to be a valid trade or something like that? No, it doesn't have to be, and no, it actually won't be getting touched every single time. So take this one, for example, we get a liquidity sweep over here. We then get an eventual break of structure with this line here. My order block, even if my break of structure is all the way over here, I'm still looking at the highest point of that liquidity sweep or the fair value gap entry to be placing my order block on. So I'd be placing it on this candle right here. That is where my order block is set. And then as we will see, by playing price forward, we don't actually get a touch of that order block throughout this entire move. We even move up, we don't quite reach it, and then price dumps back down. So for this example, as you can see, that was my order block there. We didn't reach it, but price did still continue pushing further down. Why? That could easily be because of our equilibrium was hit, as we can see there. Could even be because we had fair value gaps getting filled, as we had here, although this one does get invalidated, but we do reach that break of structure level, which, as I said, does like to get hit a couple of times for this sort of a strategy. But the order blocks and fair value gaps and the equilibrium levels, they don't always get hit. So we don't have to use all of them within one trade just to be entering into the market. When they all do sort of line up, then it's ideal, it's even better. The probability is probably slightly higher, but they're not always going to be getting hit. So do not be stressing if your order blocks aren't getting hit when you're looking to take trades. They don't have to be, and they definitely won't be every single time. So that is pretty much it for the order block section of our course. Now, all you guys got to do is some homework, of course. So go on to the markets. Let's go on. I want you to go on 3 different time frames, be it 15, hourly, daily, whatever the heck you want. Probably not the daily. We don't need order blocks in the daily. That'll be too big. Anyway, go on a 15-minute, 5-minute, 1-minute, whatever it is. Find some examples where price has a liquidity sweep and then an order block that gets touched, and then see how it reacts from that order block after getting touched. Obviously, take some photos, get it in your journal, write about it. I don't know what you're doing, but you should be journaling throughout this entire thing. We are going to be learning about journaling. That's coming later in the line. But for now, just go ahead onto the charts, find some examples of some order blocks yourself, get used to marking them up. They do not have to be exact, but just remember that it is including the lowest point of the liquidity sweep or fair value gap entry. So the lowest point of the potential setup that we are looking to enter is where the bottom or the top, depending what way you're going, of your order block must be. That will be the finish point for the order block. But yeah, that's basically it for the order block. That's almost it for all of our concepts as well. I believe there's just one more concept I need to be teaching you guys. That will, of course, be in the next lesson. And then we will be moving on to some bigger, better things.